Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, October 10th, 2025. It's 4:09 p.m. Eastern, so the markets are now closed. Just wanted to do an update, brief update, and kind of take a look at everything out there right now, and of course, what to expect going forward next week, since it is Friday. So this is a closing market wrap for the week. There's our big fat, hard to miss it, bearish engulfing candle on QQQ. And we did close down the lows of the day. Earlier in the day, I had posted, I'll try to get to that in the comment section. We hit that first target that I'd given you on the futures, first target zone, where a reaction was likely. We got one. It was a little balanced, more so a reaction in time. Then I followed up with that saying, look, this is probably going to end up dumping into the close. That was a couple hours before the close, and we did. From my experience, when we get these kind of sell-offs, it just shifts everything. You get stops get hit. Alongside traders get worried. In other words, they buy the dips on pullbacks when you're above trend. When you have such a major sell signal, and again, it was textbook when it fired today, when it triggered on the 60-minute charts. Again, this was the trend line that we were watching right here. This lower BOD trend line, and gave plenty of opportunity to get in. And there's where we consolidated around that first support level. And same thing on the futures. Let me give you that and show you that's a daily chart of NQ. I have a daily and a week, because this is our first support zone, but big red candle, nice red candle there. And on there it is. This is a 60-minute chart. So we hiccuped around there. We had a little bounce off the initial tag and then followed down. So what you're going to get usually on days like today, where they call them trend days, you can almost smell them when they start developing, where a bullish trend day, the market opens up and sometimes will gap up and just keep rising steadily throughout the day to close at the highs. Of course, little blurps and minor corrections along the way, and opposite holds true on a distribution day. So that's it, and we'll pick this back up on Sunday evening. I'll pick it up on Monday unless anything big happens. But let me just share positioning and kind of give you the big overview on the market. I hyper focus on QQQ. It's not the stock market. It's far from it. It's really just a concentrated portfolio of the big AI bubble stocks, everything, both NVIDIA, king of AI, and then the companies that are in that circle jerk, funding, CapEx spending, that are fueling NVIDIA's growth. NVIDIA turns around, does deals with OpenAI, who then turns around, does deals with AMD, and the money's just kind of moving, changing hands. It's like, I don't know if you've ever seen that Three Stooges skit. Google, it's a good one about banking, where they, Mo owes Larry, or Larry owes Mo $5 or $10, and he gives him that, and then it goes around each of the three, and it's similar to what's going on in the AI thing. So if you've seen it, you know what I'm talking about. If not, I'll just move on here. All right, so there's the uptrend line right there, the wedge. I don't think we have to squint to see if it broke down or if that sell signal sticks. So we'll see where it picks up next week. But let's talk about that, because that's everything. What happened today is important, but more so going forward. Okay, was this just because it's far from, at this point, a crash. It was certainly one of the bigger down days in a while, and that's actually, I was using this number, 3%. The NASDAQ closed down 3.5% today, and I said, look, if we get there, that's it's one of those are about as big as the down days you get, unless we're in an outright crash mode. So today was just a down day. And however, it had extreme technical significance. That's what I'm going to cover here in the charts, and then we'll try to figure out where we're going. So if you recall last Friday, because somebody prompted me, it was during the week, but I did a market update on Friday as well. And this is this is cool. This is where all that money's going for AI, and this is Google's Gemini AI thing. And it says they gave me a free 1 year free thing. When you buy a phone, you get a friggin' year of the free. And I've never done this, so I had I plugged in the link to the Friday's video, because I recall predicting that we'd probably see a market. There was a good chance we could see the market start to crash within the next couple of weeks. So you plug in the link and it'll summarize it. I just prompted to give a summary of the video. Of course, it spelled my name wrong. It's on a PH, but And here it is. So market status, the markets were flat. It talked about the government shutdown and how it's delaying the data. However, ADP, private sector, really missed by a mile and confirms that the job market has clearly turned, as I've been stating. ISM services came in at 50, so that was about all we had recently. As far as big government reports on the market. Remember, some of those ADP is a private sector thing. It's not affected by the shutdowns. And then again, this is the prompt. My focus, it picked up. Focus was on the VIX Volatility Index and citing it as one of the best risk-reward profiles right now, with upside potential considered huge. And it even gives you where that was talking about, what part of the video. And there's that market crash warning. I wouldn't be surprised to see a market crash within the next few weeks. Now, again, today it wasn't a crash. It was a good down day. If you were short along the VIX, you did well. But this is still what I think has a lot of potential based on all the reasons cited. And then it went on again to summarize that the VIX has a nice technical setup, and I described it as a coiled spring awaiting a catalyst. Okay, guys, this is what I, just try to convey all the things I've learned over years. That catalyst was, and as I've been stating, you need to see a sell signal in the markets, and we couldn't have had. This is the best sell signal I've had in over a year. That primary uptrend line. We've had other little breakdowns on the 60-minute chart and short-term charts, but we just took out the primary trend line and we took it out with conviction. And so that's when you unleash a coiled spring. And I went on in that video, and I've been talking about recently, is be ready. If you're on on the fence and you see the breakdown, you don't jump on it. I'm going to get to the VIX in a second. When she wakes up, once she breaks out of the stables, that horse can run, and she often does. And she won't let you in with an objective entry. Again, maybe we get a pullback, but I'm gonna go over the VIX again. And I went on to say, still time to be, trading a long short portfolio, and preferring those solid kind of blue chip companies beat down to support, because there's less downside in there. Tesla, highlighted the bearish engulfing on Tesla, and how, I'm also looking for a high level bearish PPO crossover. So let me get to that in my notes. I want to follow up on Tesla. Tesla is also a crowd favorite. It not necessarily part of the AI bubble, but certainly a crowd favorite stock. I went on Netflix, NVIDIA, talked about NVIDIA and the technical posture, which preceded a 42% drop. And then these guys, which had recently had bearish PPO crossovers, and previously or historically, those drops were, about 30%. All right, so that's it. And let's get to the chart. Okay, you have, for those of you that don't trade futures, you have the VIXY trade, or again, you pick your poison. As I've stated recently, you really, in my opinion, don't need to use those leveraged VIX ETFs. You've got enough juice already. It's like going down to the Porsche dealership, buying a twin turbo 911 Carrera, and then taking it to the body shop and telling your mechanic to put nitrous oxide on the damn thing. It's just, you don't need it. And it can hurt you if it goes the wrong way. So plenty of juice. Now, it's nothing big, 12.39%, but futures did a lot better than that today. Okay, the October, which in the earlier video today, I told you they're still the most liquid, most actively traded, most volume. And you'll start to see more and more traders roll into the Novembers next week. I started to roll this week, left some on, because if we next week is a crash week, you're going to get more bang for your buck out of the Octobers. They were up 18% today. The November contract closed up 10. So that's why you have that kind of in the middle there, closer to the November. Remember, VIXY as a big ETF that has a lot of contracts, they're probably going to start rolling, and they probably have already started to roll. Plus, they have their expenses and fees that you don't have. If you trade the VIX, whatever your broker is going to charge you, and that's about it. And plenty, again, what I was talking about earlier is the history of it. Once it breaks out, sometimes you get a little blip, in a little pullback, but sometimes she's just full throttle up and doesn't let you in. So we'll see. And that's when it wakes up again, and it's not a random thing. This is, if you're just looking here randomly and you look for a blip, you want to see it wake up, perk up, and then break out technically. So first we broke out of the wedge, consolidated for a couple days. QQQ was testing, and like I said, that breakdown was just so ripe I could smell it and taste it on QQQ on the wedge. And then boom, as soon as the QQQ wedge broke down, this thing fired. So we'll see. And like I said earlier, if this market can just dismiss that next week, if they come in and buying it, believe me, I don't think this is enough to make Trump worry. He started worrying in early April when he saw the markets crashing, and that's when he cowed down for the first time, and he's done it many since. And there's that whole taco trade joke going on. Trump always chickens out. But stock markets, he's got plenty of room to let it drop, I think, before he needs to freak out and come in and backpedal on his comments today. So again, I just go off history, and the likelihood is however this zigs and zags, looking at a plenty more upside from here. And we have the buy signal, so it's certainly a weekend to go home short, because the best scenario possible, what I would love to see, and I can tell you it's something I would expect to see, favor it. It's not, I wouldn't bet the farm on it. Like every weekend I lighten up a little bit and book some profits, because a weekend anything goes. But is another gap down, just hammered down, because I've traded, it's been years since I've seen such a one-sided, all, bulls coming out of the woodwork, foaming at the mouth, bullish kind of trade. And what happens in those is the best short entries, the most profitable rips in the VIX and the most profitable shorts are the ones that trap in. So today's slide was fast enough, I'm going to say, and some of you might know this, maybe you work full-time jobs, you're just maybe retired, but you're not in front of the computer all day, and you didn't get those the email I sent, or the post I made when we broke down here, and it happened during the video, and then I got it out right as quick as I could, screenshotted these charts, got the breakdown out to you. But so it was very swift, and so those are my favorite kind of breakdowns. Why? Because it traps a lot of longs in, and they're just praying and waiting for the bounce now. You can see there weren't a lot of dip buyers stepping in today, and that's a kind of a tell. It was a litmus test when we hit this first support. In the consolidation, the bounce was very muted and then got sold into. So that tells me that for once these dip buyers are very nervous, hey, it's the biggest drop in many, many months, and maybe possibly all year. So where were they? That's number one. And it just shows, like I said, when the last bull has bought his or her share of stock, and I'm speaking generally, metaphorically, not literally, but after a big bull trend like this, when everybody's bullish, sentiment surveys tell you everyone's been getting bullish, just the general consensus on the internet and people you talk to, that's when his or her, the last bull has bought his or her last share of crypto or Nvidia or whatever it is. There's no one else left to buy, and then you can get those pretty swift drop downs. And then they, it shows they didn't come in and buy the dip today. So maybe they do tomorrow. On Monday. We'll see. But as of now, it's a sell signal. We're going to take it on. I'm going to take it on face value. Certainly going to go home short over the weekend, and we'll see where we pick up next week. And then the other thing, what I was saying, what would just be a beautiful scenario is to see the markets gap down on Monday, because then that further traps, and it really starts to jitter, especially all the Johnny-come-latelys. Not, we were buying here, and I can tell you the masses have been buying here. And the volume price histogram, volume patterns, everything tells me that's where, nobody wanted to buy there. Everybody wanted to buy here. So that's why you could see that quick down. And again, a gap down does two things that I like, when I'm shorting. Number one, it denies what I call the JCL, Johnny-come-lately shorts, those that are, bearish and waiting for a big pullback, but they didn't have the gumption to pull the trigger. And this happened so fast, they missed it. So they're waiting for maybe a back test, right? A back test of the wedge. And maybe they get that, or maybe, again, anything can happen. But let's just say they didn't short. but they're waiting for a kickback rally because they don't want to short such a big drop like that. And especially think about the individual stocks. If the NASDAQ 100 is down 3.5%, you got plenty of stocks down 5, 10% plus. And so they're waiting for those bounce backs. And if it doesn't come, the reason that creates room for that type of crash scenario, or crash like swift move down, is because you keep that very low short interest. Very few are short. When you have a high short interest on a security and you get big drops, when you have a lot of short interest in anything, you're going to have short sellers covering, taking profits along the way down. But when you have a very low short interest, those shorts aren't there to buoy the stock. So, highly shorted stocks tend to stop falling at some point because you've got a lot of shorts in there and they're all starting to take profits here and there. And then the other is it can bypass, a gap will bypass stops. So someone might say, shoot, man, I just bought, in the last few weeks QQQ and I'm already down. And so let's just say, okay, hypothetically, here's where their stop is. They see support there at that 583.50-ish level. And you gap down here. And they had a stop loss order, or stop limit order, let's say, because they didn't want to lose anything more than that. Well, that stop gets bypassed, and then those losses keep building. I'm going to move on. Guys, it's just a possibility. And we could, again, we go the other way, then guess what? Everyone that's shorted today, they start stopping out. Again, it depends on their convictions. This is a pretty damn good sell signal. And like I said, at minimum, I think a bare minimum stop, if you're a swing trader, somewhat above the recent highs, wait for a solid daily recovery, not even an intraday pop back above the highs and the trend line there. Otherwise, it's a good sell signal. And like anything, it either plays out or not. And there's still plenty of other trade ideas, long and short, on the site. So the index or VIX should never be 100% of, in my opinion, anybody's portfolio. It's just one of many trades. And the other one, still like the smallies. I told you they're going to most likely go down in lockstep, or more so than QQQ. They were down 3% today. This is IWM. And again, I've already covered it quite a bit. This is I may have added this level today, noticing here we had nice reaction highs and a reaction low there. So it's just support, minor support, 237.61. These are still your targets I gave you on the official trade we shorted there, and then I've highlighted the back test there and the rejection today. So looking good there. Let's talk about, I just happened to notice this because when I queue up the small cap MicroStrategy comes up at the top, and I've shared my thoughts that I believe Bitcoin and IWM and QQQ. IWM and QQQ are the risk-on indexes. QQQ is the risk-on index of large caps with the mega tech, mostly AI, big tech companies. And then IWM are your small caps, and that has a lot of high-flying speculative stocks with, less solid fundamentals. And MicroStrategy is a trade on Bitcoin, and it closed right on that trend line today. So keep an eye on this one. If I am correct, and there is going to be a lot more downside in the market after this, I would put a high degree of confidence that Bitcoin's going to go down. I'm going to get to Bitcoin in a second. If Bitcoin goes down, MicroStrategy will go down as well. And, it tends to follow Bitcoin. And remember, this is just, I've left these targets here. We shorted it way back here. And then on April 7th, as I said, posting in the comments and covering in videos that day, time to cover all shorts and go full long. So it truncated all these other trades that had longer term targets. So they still remain. Once this trend line goes, remember, that was just a little wedge break up on that divergent high. You take out this trend line, that is a much, much more significant sell signal based on technical analysis, based on this chart. It's a primary bull market uptrend line, not some little short-term uptrend line there. And it also follows a divergent high, bearish engulfing candle at those highs. You see that big fat red candle. We failed to make a higher high, put in another divergent high recently, went down, and guess what? You get an added bonus of the 200 days. See this? Boom, 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 boom. They buy the 200s. 200s are this thing's starting to wobble down below. Back test rejected. So again, the safe bet is wait for that trend line to go. You've got a little, that 280.18, I guess, was my second target from before. And once we clear out all that, especially if Bitcoin and the market's falling I'm just going to measure it for you because there's a lot of profit potential in this one. If my fourth and final target's hit, that's another from where we're at today, 63% downside. Speaking of bearish engulfing candles, Tesla the other day, as mentioned on last week, put in a bearish engulfing candle and also set up this ascending broadening wedge pattern. We had a couple stick saves and then a breakdown recently and now follow through today. You've got some minor support here now that we pretty much parked around. It's just a lot of these recent candles going that level. And again, if you shorted it, like I said, you shorted BEC, bearish engulfing candle, just put a stop above the high, let it run, go swing for the fences. If you think, if your outlook on the market aligns where mine is. And I say that because Tesla's not doing this. If QQQ does this, that I can all but promise you it's all do that indexing. Doesn't matter how many flipping cars they sell, how much Bitcoin in their portfolio goes up. Again, they're all tied in together. The risk on, risk off assets and crypto, Tesla, all of them. They're all the QQQ, NASDAQ 100, AI stocks, all that stuff. What else do I have for you? Oh, let's rifle through the sectors. As I like to say, an index or a sector is simply a sum of its parts. In the case of the broad market, the S&P 500, it's a sum of its 11 sectors, but more accurately, it's a weighted sum of those sectors. The top sector is the technology sector, which comprises about a 1/3 weighting in the S&P 500. And I don't have to squint to see if it broke down below that trend line. I've been waiting for it. Again, I told you it wouldn't be mere coincidence that this mirrors QQQ, that when QQQ gave way, tech would give way, or when tech gave way, QQQ would give way, and so there it is. So nothing else to add. This is just the start. Again, no sell signals or buy signals are 100%. You do this, play this game long enough, you're going to see plenty of whipsaws. But for many reasons I've been stating, I'm not going to dismiss this. I'm going to take it on face value unless it proves me wrong that something else is going on. All right. XLF, as I mentioned earlier today, and even yesterday, I was waiting for this 5310 support to go. Said it probably wouldn't do much. And again, it's not much, down 2%. The big banks are going to report next week. And there's a catalyst if you're bullish or nervous, you're short, but you're nervous. Yeah, you're going to have to ride through bank earnings. And as I often say, from my experience, the direction on which way a stock's going to go after earnings can often, not always, but often be ascertained by the posture of the chart. If it's clearly bullish, the setup, not the trend, but the setup, or clearly bearish, then that's the way it's going to go after earnings, despite any initial reaction. So we're going to watch that. But the sector itself broke down. JP Morgan ended up giving me that sell signal. Remember I covered earlier. Solid breakdown below the uptrend line there. Visa, we've got a trade on this one. This goes back to back here. We shorted this, I believe, I think that was a trade from back off those highs. It's been zigzagging lower. We've hit T3 and we recently bounced back up here. It's been in this trading range, so Visa needs to break this. This is also a tell on the consumer, which is a tell on the economy as well. So there's your primary uptrend line. When that goes, bigger, deeper things are going to happen to Visa if and when that goes. Of course, MasterCard too. MasterCard finally broke down, closed on the 200s today, so watch that. Takes out the 200s, that's going to be bearish. And then the rest of them, I went over this the other day. Most of the financials are already rolling over. And we are also short the regional banks, KRE, on purpose. I think there's more juice on these. And a nice 4.3% down day, right back to the 200s here. But I think more to come. Fifth Third, we're short that individual regional bank. And it came very, very close to our T2 today, our second price target. Also parked right on the 200 simple. So to be continued next week, guys. But again, this is just, it has at least one more target. And I will most likely extend down to here, T4 and T5, depending on what happens next week. In other words, if we get a stick save and they rally this thing back above, well above those trend lines, and the charts are just, I can't make the bearish case anymore, then yeah, time to reel in those shorts. And but there's no reason to let a winning trade on VIX get away from you. If you entered on the recent breakout of the wedge, or the breakout above that first resistance level just above it, I think it's prudent to say at least average or lower stops to break even, if not for a profit. Then there's all that high flying crap, like stocks like Carvana, which we shorted. Where did we short Carvana? I think it was on, no, it's right here. I think on that breakdown, managed to remain below our suggested stop of a daily close above 400. And I just updated this one for you the other day. Said we need to break this trend line right here, and that would be your next sell signal / objective short entry. If you took it, you made an addition to wherever. Again, we were about even on that anyway, so you made 10% in, 2 days? 11%, closer to 11%, just above T1. I was going to post it as hitting T1. I always say cover above the actual support level, but that you're targeting. But yeah, I can give it a little more. I think, again, this thing's just starting to roll down. If the breakdowns in the market sticks, you get profit potential on Carvana is huge. I will most likely on this one, again, depends on how the charts play out. Maybe we get a little correction here. It's a buy the dip opportunity and the markets go to new highs, and then Carvana is only going to go down so much. But way back here, when I pretty much looked like the market was topping out, I gave you those targets, which again were truncated on the April 7th lows for all those reasons. This is a continuation, just like those shorts on the indexes on the weekly time frame. So I gave you 3 actual current targets. The first one was hit, and like everything else, time to cover up on April 7th. And we bounced. And sometimes when you break down from a divergent high, you never look back. You'll zigzag down to your targets. And then it's just as often you'll go up, make a marginal new. As long as it's still a divergent high, the technicals do not change. It just sets away for an even bigger drop because you're going to fall from higher levels. So now analyzing this on the weekly chart, you can see I have support at 353, about 316. Then the 200-day moving averages. And T3 is still the current final target, although I'll tell you what, yeah, I'm gonna make this official. And I'm looking at the chart, and I think if we get to T3, whether we bounce there or not, ultimately we're gonna go down here. So I'm gonna tell you how much that would be. A drop of roughly, well, I'm just gonna grab the high of that candle because it locks to it. 85%. So a lot of meat on the bone on that one if it plays out. And I know very few think it will, but this is the nature of this stock. It does these, runs up and has these powerful trends. And once it breaks trend after a big, multi-year divergent high, that was also a divergence line disappeared here. Then you go on, you break your 200s and you go down, and this stock fell. Oh, I already had it measured, 99%. I don't think it's going to go. It could go down 99% if they're really cooking the books, like some people say, and there's some accounting fraud going on. But for now, let's just I'd be happy with a 85% drop or any part of that. And last but not least, I hit on the main stuff, really, the main indexes and things I'm watching. Junk bonds continue to sell off as expected. I actually went ahead before the close today, about an hour before, after the video, and I took a small position in this for the reasons I stated before. If nothing, both as a pure play, again, just if you're mechanical, whatnot, to buy a stock that's down to well-defined support while extremely oversold, and you look at the track record as I circle the last 1, 2, 3. Anytime you cross below this, that's the 30 level on the RSI. That's oversold. I'm highlighting them here, each and every one without missing any. And that one we kissed it there. That we touched the 30 level, and you can just follow. Just take your eye and follow up what happened. Oh, I didn't. That should have been more precise. You see what I'm doing, right? And okay, simple stuff. Now, market, if there's some more stuff blowing up in this sector, yeah, these guys could crap out. But I like it, and I like it as a hedge, because if the markets come in and something happens next week that causes the stock market to rally, sooner than later, you're going to get a potential explosive short cover rallying here. And if not, guess what? If it goes down, I have not too much that can hurt me. Even if this thing went to zero, again, I took a starter position. But where to? At least back to my third target there, minimum, and that would be a bounce. If it happened quick, 8%. And if it happened at that same level, but it took a few months, guess what? I'm going to get paid a fat dividend. This guy, these guys are kicking out a nice yield. So either way, and then there's a gap backfill there. So just want to point that out. But for the reasons I stated, I wouldn't go too aggressive on it, at least not just yet. This sector is still in free fall, and there could be some more problems, especially if the financial sector unwinds. You start getting an unwinding in the banks, the regionals and the big banks. Junk bond yields start going up, and credit spreads go up. Yeah, you're gonna, that's gonna keep a lid on these guys. But all right, let me wrap it up there. If I missed anything, let me know. Again, this video is not all inclusive. I'm just covering the main things that I'm focused on and watching right now, and what to look for and expect going into next week. This has been Randy Finney with The Right Side of the Chart. Have a great weekend.